Tomorrow on Wednesday, Powell and the Federal Reserve will release the federal funds rate. So this is really important for all assets, really. But in our context, we're talking about the stock market, S&P 500. So they're expecting rates to go down by 25 basis points, so 0.25%. Anytime. So what happens when rates decrease? Essentially, that allows companies to borrow money at cheaper rates. And if they can do that, the math works out that the companies are worth more. So when interest rates go down, companies are worth more. And hence something like the E-mini, the S&P 500 goes up. The thing is, let's look at the odds. So this is Polymarket. Polymarket is predicting about a 97% chance that the Fed will decrease by 25 basis points tomorrow. So it's almost a certainty that the rates will decrease by 25 basis points. So that means that the price increase, a lot of that has already been priced into the market. And I'll show you the example. Looking at the odds of this 25 basis point decrease line, November 22nd was when the market, when the odds here had dipped. So November 22nd, and then since then, up until today, the odds have increased. They've steadily increased that the rates would decrease. So if I pull up November 22nd on the daily chart, so this day is November 22nd. So since November 22nd, the S&P has gone up. We're now about 100 points above where we were. So as the odds of that interest rate decrease have gone up, the market has gone up. So to me, let's say the interest rates do what's predicted and they go down 25 basis points tomorrow, then often what happens is the market will kind of shoot around a little bit. There's a spike in volatility for a few bars, but really I don't expect the market to really go in one direction and trend strongly in one direction. What could cause the market to trend strongly in a direction and break out one way or the other would be if there was something other than a 25 basis point decrease. So if there's a shock, so let's say Powell gets out there and he says, actually this time we deemed that it's appropriate to reduce rates by 50 basis points, and we will have a continued effort to lower rates in the future. Well, that would be a shock, and then that would be greater. The impact on that would be greater than what the market had been predicting. So that would be very bullish, and we'd probably see like a breakout up here, and then a continued trend up. Or let's say they come out and they say, we're going to decrease the rates by 25 this time, but in the future we are planning to slow the rate at which we will decrease the rates. So the plan is different, where they're gonna have it be slower. Then that would be bearish, because the market has been pricing in a certain plan of how interest rates would drop, and if that plan is going to be slower, then that means rates will stay higher for a longer amount of time, and companies would be worth less. So that would be a shock, and so that would probably be breakout down with some sort of follow through. So that's kind of how I look at the FOMC decision. What's already priced in, and if something happens that is not priced in, then that's when you can expect a larger move with follow through. So I was just thinking of that. That's tomorrow. it's almost a certainty that that's going to happen tomorrow. But if it doesn't, then that would be, like a 3% chance that something else happens tomorrow. Then that would be a shock, and potentially there could be trades out of that. So that's all I had. Hope you guys have a good day trading. I'll see you next time.